Thanks for all being here on this gorgeous day. I'm Jen. This is Amber. We're thrilled to be here today. We come and do a lot of financial education at the university, so it's always great to see some familiar faces. So if you've probably seen us around campus or come to one of these before, we want this to be an open dialogue as we talk about understanding credit reports and scores. So as we're going through things, feel free to ask questions, share stories about situations you might have experienced. Amber works at our downtown branch and will probably talk about some experiences she's encountered with some of our members. I tend to talk about experiences, especially on this topic, that my family and I have gone through. And just it's great to share those with everybody. So please feel free to raise your hand and share anything or ask questions as we go through everything. But what we're going to touch base on is why credit's important, what's on your credit report, and how to obtain your credit report. How credit scores are calculated, that varies between all the bureaus, so we'll go through that. How you can build credit, common myths that are associated with credit, and then tips for using credit wisely. Knowing how to manage your credit and understanding how it works is truly a life skill. So at Sound, this is what we do to help the community. And we really want to give you all the tools and resources you need to be financially confident in the decisions you're making. So let's go ahead and get started. So why credit is important. Many of you maybe purchasing a vehicle, looking to buy a home, get a new apartment. What about you're here at the university, you want to start your career, right? So your credit report can affect that. 34% of employers, if not more, are doing background checks on their employees. And why would they do that? Anybody know why? Because your credit report is a reflection of you as a person, a character, right? It's showing how responsible you've been with the credit that you've been given and how you're utilizing that. So it really gives an employer a good idea of what to expect in an employee when they're looking to hire somebody. I used to sit outside our recruiter's office and I would listen to them call and talk to people, and they really were checking on credit reports when they're doing background checks on people. The TSA is a really good example of an employer who they will look at someone's credit history, and if somebody has outstanding debts that aren't being managed, before you can go work for the TSA, you have to have a plan in place on repaying that debt. So really kind of an interesting employer who's taking into consideration their employees, right? And the stress that goes into their finances. We all know that it plays a huge role. And if we can help our employees get the tools that they need to maybe remove some of that weight that's on their shoulders regarding debt, you're going to have a stronger employee. So those are things that people are really looking at. Sorry, this is kind of slow. Renting or buying your own place. So when you're going to buy a home, your credit report is obviously going to come into play. Anytime you're trying to get a loan, your credit report and score come into play, whether or not a financial institution is willing to lend you the funds, or if it's controlling the interest rate that's associated with your payments and the loan itself. At the same time, landlords are looking at your credit history similar to what an employer does, right? They're looking at, are you being responsible? Can I trust you to live in my home and make payments to me on time? Because as your landlord, they need your monthly payment to cover their mortgage that they're doing. So something to think of there. Getting a loan when you need it. So right now I have an 18-year-old who he is ready to get his own car, right? He wants to have auto payment. He wants a new car. He has to build credit first. So if you haven't gotten a credit card or anything like that to start establishing credit, those are things you're going to want to think about to help you as you start to think about maybe purchasing a home, auto loan, taking on those bigger loans that are out there. Okay, so we're going to take into consideration somebody who comparison between Diego and Angela as they are looking to purchase their first home. Has anybody tried to purchase their first home yet? Anybody yet? Yeah. It's a lot of work, right? So this is a really good example of how your credit score can affect what you're trying to buy. And we've done this for you two, Hisuk and Sally have listened to this presentation several times. We've changed some numbers to make it more realistic with today's prices, and the final outcome is pretty incredible on why your credit report and score is so important. So we have a $330,000 mortgage for 30 years that they're both trying to obtain. Diego's credit score is 670, while Angela's at 750. So 650 is not a bad score, but 750 is really good. The highest you get, and we'll go over this in a little bit, is 850. So at this point, you can see that Diego's interest rate at that 670 is 11.95%, while Angela's at 8.95%. We don't have the 3% anymore, but maybe someday we'll get back to it, right? Those high interest rates really affect things. We're looking at a almost $3,400 monthly payment for Diego, while Angela's at $2,642. And if we look at over the period of time of 30 years, he's going to pay $886,000 versus Angela at $621,000. So when you're thinking about your credit report and your credit score and how it impacts you, this is a fantastic example because it costs him $265,000 more on a mortgage for 30 years versus what it costs Angela. And that's the difference in the interest rate. So really take that into consideration. There's a lot I could do with $265,000, right? And there's ways you can get around that so that, controlling your credit and making sure your credit report, you're paying your payments on time. It can help you in increasing your credit score. Thinking about refinancing, things like that can help you so that you don't have to pay that additional $265,000. But this is just one example that we'll go through today.
So what's on your credit report? So your credit report kind of is like a paper version of you. It doesn't define you, but there are things that show on there, and life is a roller coaster and things can go up and down. So I would never want anybody to think if you're in this room and maybe there's something going on in your life, that happens to a lot of us. So things that report on your credit report, there's longevity that's taken into consideration when you're looking at your credit report. So it'll show you like a date that something's been opened. So whether that be a mortgage or a credit card or an auto loan. And then other things that report on your credit report are your timely payments. So making sure that you're making your payments on time. And then any personal information to you. So of course, name, social, date of birth. If there's been a name change for any reason, that may pop up. That we call that like a name alias, and we may see multiple name aliases. So whenever a lender or a landlord or somebody's pulling your credit and they see something like this, they're going to want to have to confirm or identify you to verify that yes, this is you that we're pulling your credit report for. So it's just an added level of security. And there are other things that can show up on your credit report as well. Addresses that have been changed or updated. And then consumer statements. So like putting a consumer statement on your credit report. So if you tell the credit bureaus, if somebody is trying to lend me money in any way, shape, or form, then you need to contact me at, and you can put your cell phone number down. It may feel awkward if you're sitting with somebody and their phone starts to ring because it's been 4 years since you put that consumer statement on, but that is our duty as a lender to have to do that for you. So it's another added layer of protection. Another thing that shows up on your credit report are credit pulls. So if you've had multiple credit pulls over the last 2 years, we can see those things. If you've had multiple credit pulls within the last month, there may be question as to why. So it's just, again, another added layer of security or protection. So it's a lender's job to learn how to read those credit reports to be able to relay that information to you. So there's 3 major credit bureaus that are reported to. So most lenders will report to all of them, but lenders or landlords or whomever may decide to pull from one specific credit report. And the Northwest, really popular is Experian. Equifax is a good fallback. There's even, over in Eastern Washington, I know there's a lot of lenders that will use TransUnion even. So there's 3 major credit bureaus, and your score can differ throughout the, each one of them for some reason. It's a very complicated algorithm on how they get that score. But lenders, like big lenders, I say big, kind of umbrellaing, like if you're applying for a mortgage or you're applying for an auto loan, these lenders may reach out to all 3 credit bureaus to get your score and report and want to land you somewhere where you're scoring the highest, which is a good benefit to you because, again, if we go back a few slides and you look at the difference in interest rate, that'll put you in a different credit tier, and that could be really beneficial to you.
Has anybody ever pulled their credit score and looked at like Experian and TransUnion and saw a difference in your credit score? It drives me crazy, right? Because I always want the higher score. And part of that is exactly what Amber was saying. Like for sound, we use Experian. We may not report to the other 2 bureaus, which could impact your why your credit score is different, along with the algorithm that they use.
So different things that are on your credit report, kind of touched on those a little bit, but all of your identifying information. So when you're applying for credit or trying to have any kind of credit pulled, then it's going to have all of your personal information. It can also have any kind of public record listed on there. So if there's some kind of like personal lien against you in some way, I've seen them for owing family support or there's some kind of obligation that you're required to pay to the county or the state. And inquiries, those things, those stay on there for 2 years, but the other things, they can stay on there anywhere from 7 to 10 years, depending on what it is.
Has anybody ever had somebody else's name on your credit report? So my name's Jennifer Reed, my husband's John, super popular name. And when we went to purchase our home, there was another John Reed on his credit report and we could not move forward. Thank God it was a long time ago and not in the days where we are just fighting for a home and to get approved, right? So he had time to get it off before we finalized the loan itself. But that's why it's really important to keep an eye on your credit report and what's on there. Did I go too fast?
Oh, no,
Okay.
I was too slow. So we talked, I spoke a little bit to longevity on your credit report, and positive credit definitely stays on your report. That's a good history of you. And so having on-time payments is definitely a number 1 factor in making sure that you're creating positive credit. You had a question? So your FICO score is like an umbrella of your credit score. So that's like a full credit report. So that's pulling credit cards, auto loans. It's collateralized and uncollateralized loans. So collateral would be I have something tangible that I can take away. So your home, a car, a motorcycle, a bike, ATV, whatever. So if those payments were to default, we could pull them away. Whereas something that doesn't have collateral would be like a personal loan or a credit card because there's nothing tangible to take away. So the FICO takes into account all of your debts and gives you a good solid number.
How does that converts like your credit score?
So typically when we're pulling credit, we are pulling your FICO. There are different credit programs out there for you to be able to track your credit and pull your credit and see what your credit score is. That is a soft pull instead of a hard pull. A hard inquiry is I'm asking for your full credit report and I want to see the background of that to see what it looks like on paper, to see the responsibility that's there. Whereas if you're having some kind of credit tracker, sometimes, not always, but sometimes those credit trackers can be backed by different companies, and so the score can differ, right? So let's say, for example, you're following a credit tracker and you're in that and it may be a free platform, and every time you get in there, there's offers for credit cards. That's because these credit card companies are supporting to help create that and make that free. So that credit score that you're seeing, that could be a credit score that's specific to the utilization that you've had on unsecured debt, so credit cards, right? So you're really great with unsecured debt, and maybe 3 years ago there was a car payment that you missed a couple months in a row, and so that's not taking into account that. So when you pull your FICO, or you're coming in and you're asking for a full credit report, your credit could differ from what this company is telling you. It could be a little bit less because of those missed payments, because now it's pulling the full report. Does that make sense? Yeah. Good question.
Yeah. So, go ahead.
No, go ahead. How can you obtain your credit report? No, you go for it.
So there's a lot of ways you can obtain your credit report. So a lot of financial institutions, through your online or mobile banking, you might be able to see your credit report each month out there. You can also go online to annualcreditreport.com. They are a free resource for you. So prior to COVID, you used to be able to pull your credit report from all three bureaus, just your report, not your score. From all three bureaus one time a year. And then COVID hit and they changed that and they made it so that you could pull it weekly. And that has continued. They decided to have that go on indefinitely. So how many of you have ever pulled your credit report? Excellent. I highly recommend it, especially knowing where we are these days with identity theft. Keeping an eye on your credit report, even having a company, maybe if your financial institution doesn't provide it to you each month, or you're not disciplined to go into annualcreditreport.com regularly to check it like every quarter or every 6 months, consider working with a company for just a minimal amount, like anywhere from $10 a month. Some of the companies will do that to give you a little bit of peace of mind and make sure that nobody's stealing your identity. Because if that happens and they open an auto loan, credit card loan, like the work that's going to go into that is a lot. Yes.
Would you recommend going directly to the Experian and doing the temporary freezes or long-term credit report?
I'll hand that one over to Amber because she knows, she deals with this all the time.
I do, and in this day and age, it's very popular. It's something personally that I think is really great. I don't think that that's a bad idea at all. If you decide to do something like that, keeping those passwords safe and secure, because it's got your whole life on it, that credit report. And then making sure that if you're locking that and you have the app to lock and unlock it, that's great, because a couple years down the line, you may need to have your credit pulled and you could run into a hiccup where we can't pull your credit and we need you to unlock it. Oftentimes they'll give you a freeze pin. So having that freeze pin and knowing what that is, or that app to be able to do that. But life goes like this, and so sometimes we don't have that phone anymore or whatever. So just keeping that stuff safe and secure if that's your decision to move forward. But I think it's a great idea.
And when you do unfreeze it, it does take like 48 to 7. No, or
Not
does
anymore.
it happen
It's really
instantly?
quick. Yeah, I just ran into this like 2 days ago.
Yeah.
Today's Wednesday, so I'm telling the truth. So Monday, I did run into this, and the gentleman pulled his phone out, unfroze. I went to request again, and voila, there it was, 30 seconds later.
Cool.
So it was really, really amazing how quickly technology works.
That's great. Yes.
Would your credit score decrease if you keep checking your report?
If you're checking your report with the credit tracker, no, that should not affect you negatively. If you are applying to lenders to borrow, that could absolutely affect you. And again, the way that they put you in, like they get your credit score, it's complicated. Couldn't crack it if I wanted to. There are different factors that go into it, but the times that you pull it. So some people can pull their report once, some people can pull it 3 times, and their credit score can start to be affected by a couple of points. One of the things that's the exception to the rule is when you're shopping for a vehicle. You can pull your credit many times within that period of time because you're shopping for a vehicle. So you pull it 30 times in that 30 days, you get your new vehicle, it only can affect you as if you did one pull. So that is the one exception.
I was going to pull up my app. I can't get the internet to work in here, but I was going to pull up my app and my account at Sound and show you that like I could go out there right now and see that my scores, whatever it is, and I can see everything that's on my report. That is because Sound's offering that to all of their members every single month. And so at the end of each month, a new report will be there and show anything that's out there.
I have another question.
Yes.
So, on my Navy Fed, I have one credit score, and then it's different than my Experian. Which one would be more reliable?
So it just depends because we don't necessarily know who Navy Fed is using as their bureau that they're reporting to, right? So that's why it could be different, and it's the different algorithms and who's reporting to who. So that's why they may be variant. They should be probably pretty close, but they're never on exactly perfect, which drives me crazy.
Mm-hmm. Also, then you take into account that when you're requesting credit, right, you may see one score, but then you've just requested a new credit pull. Now your score could have been affected a couple of points just by asking for that credit pull with that new borrowing. So your score could differ. 100% of the time, I've always seen it differ. Usually by just a few points, though. Yep.
So you can also reach out to the bureaus or annualcreditreport.com and request that they mail you your information, your credit score or your credit report. I ran into this with my son when he was a minor. I couldn't get his credit report, and the only way I was going to be able to get it is if I mailed them in his birth certificate and I want to say like a copy of his social, and I'm like, I am not sticking that in the mail. Not worth it. We'll find out everything later, but wasn't worth that risk to me. You can also call them, so that information's there. Oh, come on. There we go. And if you don't have a financial institution that provides you your score, so annualcreditreport.com for the free report is just going to give you your credit report. If you wanted the credit score to go along with that, that's going to cost you $6 to $8 for each time you pull that.
I think there's just a lot of value in knowing what's on your credit report because sometimes those surprises, you don't want to have to need to borrow. You need a car and now you're just discovering that surprise, there's a medical bill in there from 3 years ago that you totally had no idea that had gone to collection because you've moved into 4 different apartments since then.
Right.
So I just think that there's a lot of value in actually just pulling and reviewing your credit report and knowing that confidently knowing this is all of mine. I did all of these things, and I continue to.
Yes.
Just to clarify, annual credit score, there's a tiered selection between the free credit report and the more in-depth credit.
So the credit report will show you could do it for all 3 bureaus, and it'll show you what they're reporting for your personal credit that you have, your history, all of that. It's not going to give you that FICO score. So that could be anywhere from 300 to 850. That won't appear there unless you're willing to pay for that. Yeah. Yes.
Is FICO score only 850? Because I have a Costco card through Citibank and the scale goes up to 900 and mine was like 873. Is this real?
I have that as well. And so when you're pulling a hard pull from a lender, we range from 300 to 850. So having those other like credit trackers, the way that they have their calculators, I am not 100% positive why they go over and above and beyond. But I can tell you with my city tracker before, like I've had that, and then I've asked to borrow money for different things. Like I needed a new car a couple years ago, and it was pretty close to my city one. So I was like, how did they go up to 950? Do we have any connects there? We could find out.
I don't know, we can find out. But I mean, if you're at that high of a level, that's great.
Right.
So just know that you're doing
I don't know why
excellent.
you're so happy. It doesn't matter anymore. Like, I don't know, but I like that number.
That's right. Yeah.
We shoot for the moon around here. Okay?
That's right. When I purchased my car last year, our consumer lending team called me and they're like, okay, so you're all approved, blah, blah, blah. Here's all the details. And go ahead and tell your husband that your score was 845 and his was 842. And I'm like, perfect. That's all I needed to know. It's always a competition.
Absolutely.
So, okay, if you see discrepancies, you are your own advocate, right? It's your responsibility to speak up and file, to talk to those bureaus, the lenders, everything like that, and file a dispute. So the first thing you should do is call the lender or the collection agency who's reaching out to you and talk about what's going on, and report it then to the bureaus. And you have the opportunity to put a consumer statement on your credit report. So if there's a discrepancy, I don't remember how many characters or words it is. It's not a huge amount, but say you had a discrepancy with Citibank and somebody had opened a credit card that you were not familiar with, you could put something on as your consumer statement that I found out on April 23rd, 2025 that there is a discrepancy with Citibank. I'm working with them, and then that would protect you in that way until that's resolved. And then if that doesn't go well, you can always file a dispute with the Consumer Financial Protection Bureau and work with them. Just know that it might take 45 to 60 days to get a response. It takes time, and things don't happen magically, unfortunately. So just be patient and continue to advocate for yourself. And identity theft is a huge part of this, right? Again, we can't stress enough. Make sure you're monitoring your credit. Make sure you're familiar with all of those. loan that's out there that's in your name that's pulling through on there that you see there. So Amber talked about this earlier. You can put a freeze on your credit, just to have to make sure you remember your passwords and everything like that. I mean, who remembers their address from 15 years ago, right? It kills me. That's good. I'm always like guessing when it pulls up my college address and I'm like, oh, I know it was on campus, but what was the numbers? You know, I'm like, okay, I think that's right. So just trying to remember all of those things. And then you can file a report with the FTC under identity theft. And really what we would recommend is that you're tracking all of your correspondence, right? Keep all of your emails, create a file where you have any documentation that's coming in, scan it, keep everything together so that you can track things. If you pick up the phone and have a conversation with somebody about the identity theft, get their name, their phone number, write down what company they're with so that you are tracking that, because again, you are your own advocate, and so you have to protect yourself. Anything else? Nope. All right, so how they're calculated. We have 20 minutes.
Oh, wonderful. So we talked about how it's an algorithm that they put together to figure out where you're at. But some of the most common factors that consider your calculation is your on-time payments. Another thing is longevity of credit. And then,
Here we go.
yeah.
So here we go.
So yes, payment history, that's super, super, super important. The amount that you're owed, so the utilization of your credit. So you may have several different credit cards and you have about $10,000 that you could spend on credit cards. So the credit bureaus like to see a utilization of 30% or less on the credit cards. And they say that for like an optimal result for your credit score. And so again, life happens and sometimes that goes up and down. And I think when you're dependent upon all of these other factors, that can affect you or it doesn't. So whether or not, so you want to kind of keep that number around 30%, and that's across all credit cards. So say I have $10,000 worth of credit cards in total, then of course $3,000, right? So having those amounts owed be less than. Maxed out credit cards, that's something that definitely negatively impacts everyone.
Yeah.
Yes?
Is it bad to close a credit card? But that it is.
If you intend on doing anything in the next 6 months to a year, I might keep it open for that time, just because your credit takes time to heal. It's same with getting a new loan, right? So I needed to get a new car. You get a new car and that now reports to the credit bureaus. The credit bureaus see that as a new risk. They want to see payment history behind that. And so I always say, give yourself 3 to 6 months. You're getting a new credit card. This is the first credit card you've ever had in your life, and maybe it's a low limit credit card. That's wonderful. Let's get your foot in the door. Let's get educated on how to use it. Pay that thing every month. Do whatever you want, however you want to pay it. Just making sure that you're making those on-time payments, building that history. Give yourself 6 months to a year. Maybe apply for an increase on that, right? So when you do that, maybe you started with no credit score. Now we've got 6 months of history. Now we have a credit score. Now we apply for an increase. And now your interest rate might go down on your credit card and your credit limit gets raised. So now you can utilize more of it.
What about a credit card for your business? Like if you have a business that you personally run?
Good question.
Credit system for that, or if you need to close a credit for that.
So a business credit card, when we are doing, if this is a brand new business credit card, then that's going to be backed by whoever is the guarantor of that business. So it depends on how the business is structured. So if the business is structured and you're an owner or an investor in that business, then you may be the one that's responsible as the guarantor. And that's how we determine what you're going to get for rate and limit, right? And then after you've gotten that credit card and now it's become established, now the business is beginning to build credit. And now sometime down the line, you can start to apply for credit for the business. So there could be a bigger picture. So credit cards for businesses is definitely like the first stop for starting to build that. And then there's so many other programs as well that you can go into if you're looking at venturing into that. And there's other types of loans that you may need.
So Amber, this is a really good one to touch on. Again, I mention my family all the time. My family owns a company business, my parents and my brother. My brother was in the middle of the housing issues in 2008 and his credit score went down. My parents' credit is perfect. They went to apply with Amber for a new auto. Actually, I think they went through our online system and applied for a loan for a new vehicle for the business, and it was declined, not because of my parents, but because of my brother's credit. So my parents called me literally irate. Just, we're gonna call the CEO. I'm like, that's my boss. Can we not call the CEO, please? And I'm all, let me get Amber. We'll work through this. And it was great because so it's taking that personal credit into effect, right? Even though you had two people who had strong credit and then somebody else who was working to increase his credit, he just hit a wave of life that was difficult. But great example of how an online system is great and you can process payments, but there's no one to have the conversation about what happened in life. What happened, and it's Amber's responsibility to advocate, and she took care of all of that and fixed it all for them. So just an example of how your personal credit can affect that.
Huge. It puts you in a box.
Yeah.
And you don't belong in that.
Yes.
Yeah, that regarding kind of best practices once you're perhaps done with the credit card. For example, I took advantage of like a 0 APR card for a balance transfer, and it went well. But when it was done, I just froze the account. So like, would it be better to close or freeze, or what is your recommendation?
Again, kind of depending on what your plan is over the next 6 months to a year. Also, how long have you had that card? Is that one of your oldest cards? If that's one of your oldest cards, maybe just keep it open and don't use it, but monitor it to make sure that it's not there. If it's not one of your oldest cards and we're not doing anything major in the next 6 months, we're not looking to buy a house, we're just happy doing what we're doing, then why not? Your credit will repair itself over time. Yep.
And remember that all the good credit, like if you close it, all that good credit's gone, right? So it's not a bad idea, and we'll talk about it here in a little bit, but it's not a bad idea to leave it open and maybe connect it with your cell phone payment, right? So you have a cell phone bill that comes in every month. Maybe set it up for automatic payment onto that credit card and make sure you're paying it off every month. Again, another automatic payment to pay off that credit card. And then it continues the good credit history showing that you're being responsible.
Maybe there's added perks to those credit cards.
Yep, absolutely.
Yes, so length of credit
length of history. We've kind of all talked about all this. Here's one, though, that we haven't really touched on is the new credit.
That's like a new risk. So that would be something that would be any kind of new credit that you've had established. So that's something that you would see start affect you maybe in not a very positive way for the first 6 months, just because it needs to have that new history to become established. And then this is important as well, because if we're seeing multiple new credit things happening on our credit reports, that could be an indicator. And if you're not doing those, right, that could be an indicator of somebody maybe has stolen an identity. Mm-hmm. So that's something that we look at. We always look at any kind of new credit that's been established.
Which next week we're going to be back here talking about that exact same thing. So more information coming on that too.
And then the diversity of your credit portfolio. So having those different types of loans on your credit portfolio, credit is important. So oftentimes you're starting with a credit card and then you're moving on to an auto loan. So now you've got a credit and an auto loan. And then maybe a mortgage, when we put a mortgage on there. You've got student loans on there. You're creating a mix of different credits that are being lended to you. And then that's also creating your history. And so that's what lenders like to look at, is the history, and that's what helps create your score. So all those together.
Yeah. And if you walk away with anything, please just make sure, no matter what, even if it's the minimum payment, making your payment on time every single month. We cannot cannot say enough about just make sure you do that every single month on time, minimum payment at the minimum. Yes.
Yeah, I want to touch base upon the previous point of while we do the hard or credit check, our points get lowered by, she said, by 5 or 6 points maybe.
I couldn't tell you a true figure.
20. So,
Oh, it went down by 20?
yeah.
It's going to vary. It's that algorithm, and it's going to vary by bureau. It's going to vary on maybe if you're doing multiple loans at the same time, or if something's happened within the past couple months. It's all varies on also the amount of you're trying to get for that loan.
I
of trying to get the auto loan, but
Mhm.
since
Yep.
we say credit mix might also impact or increase your credit score.
Right.
So at one point, my score is getting lowered. And
Yeah.
on the other hand, by getting the auto loan, it's getting up. So if I say my score is getting lowered by 20 and it's getting
Right.
up by 7.
Right.
So it's negative.
So that's where like that algorithm comes into play, right? So whatever the algorithm they have, maybe it's taking into consideration these percentages for each one, and that's how they come up with that score. But the more you're making that payment on time, and making sure that you're making at least the minimum and that your utilization is appropriate, all these things come into play. That is going to impact hopefully it going up. So, yes.
Can you get punished for underutilizing
Mm.
your credit? Like if I just spend
Yeah.
the credit card, second I get home, pay it
So
off.
yeah, so like I believe in I'm a big points person, right? I like the point system. If I use it for literally everything I use every single month, my husband does it constantly. I will pay part of it off throughout the month to lower that utilization and help my score that way. But if you're not utilizing it, right? If you're not utilizing it at all, it's not going to benefit you because you're not showing that you're being responsible. Yes, you receive this credit and you are responsible with it because you're not abusing the system, but you're also not using it to show that I'm making my payments on time and that I'm building my credit. So
Every month when you receive that statement, that's the information that's sent to each credit bureau. So that's the one that's telling them this is the statement balance, this is the minimum payment, this is the responsibility for it. Yeah, we can pay as we go. Sometimes I've seen that we can't tell a lot on the credit report if you had a utilization 6 months ago on that credit report. I can tell over the last month what's been going on. But if, let's say, for example, you're with that lender and now 6 months has gone down the line, but you've never truly had a statement balance because we just pay it off immediately, and now you want to increase that credit limit, they're not seeing that there was even any utilization. So what would be the purpose of even increasing the credit limit, right? So that in that aspect, yes, but not particularly, right?
yeah. So
Kind of personal preference in how you do your bills.
yeah.
Yeah.
So, okay, we have Diego and Angela again. So here's an example. So Diego has a credit card balance of $800. His maximum limit is $1,000, but every month he's paying off the entire balance, which is awesome. Good for him. Angela, on the other hand, has a $5,000 balance. Maximum limit amount is $10,000, but she's making the minimum payment. Who do you think is in a better position here for their credit score to go up? Diego, because he's paying it off, right? That's what makes sense. But if we go back to the utilization, it comes to Angela because she's only using 50% of what she's been given. He's using 80%. So if he's not paying it off before that institution reports it to the bureaus, it's hurting him even though he's paying it off. Yes.
Wouldn't it be fair to say in this case, like if that, in Angela's case, for example, that's sort of benefiting the lenders, right? Because even though, like, yes, she is adding to her credit utilization, she's not actually chipping away at the principal, and so she would still be having higher monthly payments.
Right.
Am I correct in thinking that?
I don't disagree. It may not be it's definitely helping the institution, right? And she's keeping her utilization down and making sure that she's paying it on time, which is helping her score in the long run. But is it helping her personally? Is she getting out of the debt? Because that maybe her interest rate on that credit card is 24%, and she's only paid off $5,000. So what's this going to look like next month? And if she's still using it? So it depends. Unfortunately, it didn't go into that much detail, but fair point. Anything else?
I just used to play tricks on myself with my credit card. If it was at 20% and I spent $100, I was like, now I got to pay $20 extra for that steak?
Yep.
No way.
Yeah, pay it off.
Pay it off.
Yeah.
It wasn't worth it.
Right. So, okay, how to build credit. You got this one?
Sure.
Yeah.
So you definitely want to review and see what your financial goals are. What's your long-term goal? What do we want to do 5, 10 years down the line? Do we want to look at getting a house? Are we going to need a new car in the future? Whatever it may be. So reviewing those kinds of things and then deciding, like, how am I going to start to build them? So building credit, most people start with a credit card, whether that be secured or unsecured. A secured credit card would be you put money in the lender's hands, right? So then they keep it as collateral, and then you in turn get a credit card with that limit on it. Having an unsecured one, there's very low limit ones that can start off with unsecured to just start to build that habit and have those kinds of things. And maybe you do more than one credit card. So doing even a secured loan. A secured loan is another great option. That's more so of a personal loan. So you put money in the lender's hands, they hold on to it, that's the collateral, and then they in turn give you a monthly payment and money to be able to spend on whatever it may be. So let's say you have a savings account with $10,000 in it, and now you need a new car. Instead of paying for that $10,000 car with the cash, maybe we put it into a secured loan and then give you a $10,000 check to go purchase the car, or $10,000 cash to go purchase the car, because now every month you can have something reporting to the credit bureaus that you're paying on. So that's a really great idea. And then also getting a co-borrower or co-signer. So if you need somebody to help you to begin to establish credit, I had something like this happen in my early 20s. I needed a new car and I didn't have very much credit established. And I had to call Dad and say, hey, can you come down to the dealership with me? And thankfully he was able to co-sign with me and get my interest rate down, because that's something that was important. So, and then even becoming an authorized user. So if you have a parent or a loved one or whomever that you trust, be able to add you as an authorized user on a credit card, that can help to establish and build your credit as well.
Thanks for taking that one. That was supposed to be my slide and I messed up. But look, she knows all this so well. Yes.
Authorized user, what if you were removed? Would that affect your credit score? Or is it like the same thing as a credit card?
So being an authorized user doesn't make you financially obligated to that debt. It just creates some kind of history on your report. Having that be removed from your credit report, it comes off of your credit report and then it will show up in your closed accounts. So anything that's removed off of your credit, it comes off of the open and active ones and then it goes and moves into this closed accounts category. So you can still see that there were payments, that there was one at some point. There's many things that lenders take into consideration when letting somebody borrow. But having it be removed, that would probably fall under the category same as if I was going to close a credit card. Yes, it could potentially negatively affect me for the next 6 months or so, but it will begin to repair. Some people like to, and it's personal preference, offset that with like, now I'm closing, let's say I had a Capital One credit card and I closed that one out, but that's okay because now I just opened my Citi credit card, right? And so it will balance itself out eventually. These things just take time.
Okay, credit myths.
Some common credit-related myths.
The first one is closing a credit card will hurt my credit score.
So
like
yes,
we've
and
covered it.
maybe.
Yeah, I feel like we've covered that one today. Yeah, that's a good one. But here's a good example of one. So we've got Sarah. She has 3 maxed out credit cards, paid off the first credit card, and decides to close it to remove temptation. I get it. That's real. And I don't disagree. But she has 2 remaining credit cards that are maxed out. And then Kate has 5 open cards that all have 0 balance or close to 0 balance. She closes a newer account to avoid the annual fee. So 2 different scenarios. But in this case, who's in a better position? The negative impact here. So Sarah is negatively impacted because she just paid off that credit card, right? And showed all the payment history, and now all of a sudden it's gone because she closed it. So nobody's seeing that she's being responsible with it. So I've had this happen where I had a Nordstrom credit card and my husband like just cut it up. He's like, that's it, you're done. But we didn't close it. We just stopped utilizing it and I didn't have it anymore. Nordstrom has closed that card because I never reordered a new one, so that's fine. But so in this case, that is hurting her. There's little impact to Kate here when she closes that one with an annual fee because she had little or had not used it at all. So really take into consideration on those ones that have an annual fee if you're going to utilize it and if it's worth that fee. I know Amex has a great one that people love that comes with so many benefits, but it's like $750 a year. Is it worth it for you to have that one?
Yeah, well, I utilize that much credit to be able to,
Yeah.
It's a big factor. And then checking my credit score. Checking it will hurt. So yes, but no. So you can check your credit different ways in order for it to not affect your credit score at all. And then there are other ways that if you are looking to borrow and a lender pulls your credit, yes, it could affect your credit score.
And if you're working with a financial institution and you're looking for a new one, maybe if this is really important for you to be able to check your credit score and report regularly, maybe look if it's a feature that they're offering. More and more financial institutions truly are offering this as a service associated with their checking accounts, and it's a benefit to you as a consumer.
Also, a lot of banks and credit unions, when they're going through the process of opening a new account, they will do a soft inquiry on your credit at that time, or pull something called check systems, which is a background check with other financial institutions. And you're the consumer. You can ask, do we do a soft pull? Did it pull my credit? Could you tell me what that is? Totally. The ball is in your court. You own that. That is your information.
And then soft check is going to be more like for opening a checking account, right? We do that for everybody who comes in and wants to open a checking account or a savings account. That's what we're looking at. And if there's outstanding debts that maybe there's a creditor's involved with, you may not be able to open the checking account until that's taken care of. So we've kind of gone over all of that. So tips for credit cards. And if you all have to leave, please feel free. Thank you. We hope this has been beneficial. But tips for using credit card wisely. Keep money in savings. So I'm a big fan of having multiple savings accounts and having one where funds come out every month or every paycheck and go directly to that financial institution, and I don't have a debit card for it. If I need funds for that, I have to go get them physically, and it's an inconvenience. So having something like that. So keep money in savings because rainy days are going to come and you need to help yourself. Consider using a credit card for one charge each month. So kind of like we were talking about with a cell phone or something like that. And just making sure you're paying it off. Again, utilization is huge. So keeping it under 30%. Nobody ever tells you that when you're going and setting up a credit card, right? Nobody tells you that. Like, it's so important. Try to stay under that 30% and making sure you pay it off each month, because otherwise, like Amber said, you spend $100 and all of a sudden that turns into $120. And you didn't get the savings at all. And then check your credit report and score regularly. I think we've hit that one pretty good. So if anybody has any questions, we're happy to answer them. Or if you want to come up here and talk to us, yes.
With the last tip, paying the balance off entirely, and then like the comparison of like the two comparisons of the person who paid off the entire thing versus the person who kept it open.
Mm-hmm.
Wouldn't them paying off the entire monthly be that?
If you paid the entire balance off monthly, like on a credit card, then you wouldn't have to owe any interest to the lender. If you make the minimum payment due or less than what the statement balance was, the remaining statement balance then rolls over into the next month, and that's what's going to accumulate interest. So that's when I tricked myself at a young age to say, okay, if I don't pay my statement balance off monthly and I have $100 left over, next month I'm going to owe $20 extra. That's not the case because it's an annual percentage rate that they put on there. But it's a good indicator of like over the course of a year, yes, it could cost me an extra $20 out of my potential savings that I could have. So it's personal preference. Paying off your statement balance off monthly, it's beneficial more so to you as an individual. Yeah. We still want to take into consideration utilization. So when the statement is generated, which is typically 25 days before the due date, that statement's generated, that's the information that's sent to the bureaus to figure out what your utilization is. So you have $10,000 worth of credit cards across the board that you can use up to, and you've only spent $30,000 or less. That's where you're wanting to hit that sweet spot, is to have that 30% utilization or less on your revolving credit, so credit cards. Yeah. Does that make sense? Yeah? Okay.
Just try to set a goal. I mean, life happens, right? There was a time in my life where like I got into credit card debt and it was really hard to pay it off because that interest just continues to add up. But just try to be smart and wise with how you're utilizing it and making it so that it benefits you. Life's going to happen, but be confident, set goals, know what you're trying to achieve, and manage it appropriately. And know that, like, we've had students who've come to this before who've reached out to us afterwards. So please, our contact information, email us at communityrelations@soundcu.com. This is not a sales pitch. We're here to help. So I've had a former student who's graduated who reached out to me, and she was a co-signer on her parents' credit card. And she called me after she graduated, and she's like, is now a good time for me to get off of their credit card as a co-signer and open up my own credit card? Like, that's what we're here for. This is how we help you make sure you have the tools. If you become a member of Sound, that's great. But we want to make sure you have the tools and resources that are going to prepare you for managing your finances with confidence and ease. So thank you.